Hello everyone, it's Calvin. Thanks for checking in tonight's video. Today is Friday, August 9th, 2013. Let's get right into these charts. Let's start off with the SPY, which the chart pretty much I always look at right from the get-go. Ever since this gap up off of Ben Bernanke's comments, we've just held that gap up, and looks like we're just trading in this range, kind of this rising channel, if you will. And typically these do break down eventually, but right now we're at the bottom testing that range right now. We're at this trend line. As you can see, this is holding as the kind of the more uh, intermediate short-term trend. If this breaks, your first support, if you're looking to swing something or take profits if you're short, this 50-day moving average on the daily chart looks to be pretty good with a gap fill. If we do a nice straight drop to there at the 165. 27, 20-ish area. Pretty much this would be rising in the next few days. So I think if this does break down, the measured move does take you roughly in this general vicinity at the 166 and maybe a pierce of that right at the top of this gap right here, guys, at the top of this candle. So that's where I would look as the first sign of support anywhere in this kind of band, this range right here, guys, with the 50 rising. Measured with the breakdown here, if this does break down, because like I said, these do eventually break down, and you are kind of really hovering right under that major trend line that I've been mentioning on the. You can see it on the monthly chart. These bigger time frames, okay, guys. So these, this trend line is gonna be really major. We've hit it here already, and we're kind of just still floating back up on really light volume. Look at last month's volume is a little bit lower than the previous. We did have that 1 month sell-off candle here. We did retest the previous 52-week highs, so right here, as you see, it back tested it beautifully and just resuming its major uptrend in this bigger time frame. But like I said, we are on the top of that range. Okay, guys, like a weekly chart, you can see it as well. So you have to be really cautious. We are heading towards a potential reversal zone if you follow harmonic patterns. So you have to be very cautious at this stage of the game. Let's look at the daily chart. Like I said, uh, looking to stall out here in this upper ranges at the 172-ish. That's what I've been calling out. We're not quite there yet, so there could be a little bit more upside if we do get a bounce. And generally, this is going to be your resistance as this trend line rises into this area. This is where I'm looking to add on some short here. I already stopped out. I think the market has a little bit more room for upside in the 172. So, but I am looking to re-enter because the bigger time frame is showing that we are way overbought. I mean, you're getting negative divergences on the MACDs on several stocks like Google. JP Morgan, all these major stocks are also having MACD divergences, and I'll go over those in a second. So if we do bounce here, I'm looking to look to add short here. I am in cash at the moment, but I will be looking to re-add in this range up here. I think that's some pretty good risk reward at the moment. I think the market is due for a bigger correction. Right now, we've just been floating up on really light volume until we find a catalyst to see more of a sell-off. Okay, guys. But like I said, if we do get a nice sell, my first target for support is right here at the 165-ish area. It's gonna change every day because this 50 day is going to be rising. So generally in this region right here with this gap fill. Okay, guys, if I pull a fib, we still haven't really retraced at all, not even a pullback. So we still haven't really made a 382 retrace or anything like that. So I think that's a 382 retrace from where that gap fill is. So I think that would be a pretty decent spot if I could try to grab this fib without it messing with me here. But generally what I'm looking at, I think this is pretty much a 382 retrace from this pivot low. Okay, guys. So let's look at some of these other indexes. I guess I could show you that MACD here, Divergence. Let me try to close some of these here. There it goes. See if it'll let me. The mouse. It's not really letting me here. I got too many windows open here at the moment. Let me a second. See if I can get this to stop dragging along here. Not letting me. Let me see if I can close some of these windows. See, close. Let me quit some of these other programs I have open. That's usually the reason why this computer wants to lag on me. That's pretty interesting, huh? Okay, let's see. I can't get rid of this. Let me just refresh that. I apologize for that. Let me just refresh the window, and that usually does the job. But like I'm saying right now, I think we're still making a 382 retrace. If we do correct and break that trend line after that big gap up, I think the measured move does take you to that gap fill, and that does measure up with a 382 retrace. A 382 retrace on a very strong uptrend is very, very solid support. So do anticipate a short-term bounce there. Definitely for day traders, you can definitely take that. For a day trade for a whole day, you can probably ride that on the long side and probably trim some there and then let the rest run. Maybe give you a nice 3-day move or something to that nature, a nice time count move. Okay, guys. Okay, let me see if I can grab that fib. Is this restarted? Let me see here. Like I said, I think that's a 382 retrace. Yeah, right there, that gap fill. It's 50-day moving average is roughly a 382 retrace. So that's your first support. Your next support would basically be where this last consolidation was with the 68 Fibonacci retracement. So I'll draw that in right here, guys. So that's your next area of support that breaks, and that's going to be at the 160-150 area. This were consolidated 61.8 Fibonacci. That's the strongest of all the Fibonacci. So that's where I would look for support on the downside. Resistance, obviously, this major trend line and this smaller little range that we've made since that gap up. Okay, let me go over that MACD divergence really fast. I think it's important to keep note of it. As you can see, MACDs, they don't give you much on timing, but that does give you what's in the cards in the future. Because this is what we got on Apple as well when it hit 700. As it made new highs, the MACD made lower highs. See, and we did crossover here. So let's see if that's going to be very significant. Okay, guys, MACDs are very powerful, but it doesn't mean we can't ride a little higher. So this is just one signal. Okay, so as you can see on May 22nd, we made that high. And then we made a newer high pretty much on August 2nd, and the MACD is making lower highs. Okay, guys, so that's be on alert of that. Let's look at the IWM. IWM, same thing. Pretty much, we don't have the MACD there. Let me pull that back, but really just in this channel. Okay, guys, just rising it right here in more intermediate, the more macro, bigger time frame, you are making a huge uptrend here. But for now, short-term traders, just look at this range right here. If you're small short-term trader, look at this small range. And if you're a bigger, more intermediate term trader, you look at the bigger ranges. Okay, guys. But this is your daily chart, IWM. This is Russell. So like I said, same thing. Since that gap, we're just holding that trend line. So now you notice that we are kind of hovering over that 20. Okay, whenever you kind of hover, see, this was kind of a bearish pattern. If you go on SPY, it's the same thing. Sorry for jumping back and forth, but let me try to. Wasted a few minutes on the video there because it was couldn't pull up that Fibonacci. But let me go back to the SPY. See how this made this bearish pattern failed. It was the 20 rising right below this pattern. So that's really hard for these to play out. You like to see these patterns form below moving averages. So on top of it, you can't make much out of it. So we did that pattern did fail. But now we're testing again, and now we could be making another bearish pattern here. We had a doji, so that signal is short-term low. So sure enough, it is holding, but we are riding this 20 moving average quite a bit now. So it's more probable that it will break on the second hit. Okay, guys. So that's why I'm kind of leaning towards. If it does break, we are headed towards the 50-day moving average. Okay, so that's what I'm seeing on the moving average analysis. Let's go back to the IWM. So jumping around here. Already 8 minutes on the video. Let me try to make this quick, guys. I try not to make these over 15 minutes long. So we are riding that 20, so know that this is weakened, okay? And that next support is for the IWM is going to be around the pierce of the 50-day moving average. See how this was previous resistance? So on the way down, that's going to be a retest. With moving average there, the $100 even number, that's going to be support on the IWM, okay, guys? So look for that. Fibonacci looks probably nearly a 50% retracement. Look at the Qs. Q is pretty much the same deal. Just riding that gap up right here. It's holding this previous resistance, now support, and just doing constructive movement over here. Still above the 20. Nothing really wrong with this chart. You'd like to see the daily chart starting to break these moving averages. But right now, it's just still trending, riding this 20. Okay, but notice the 20 is going to be minor now, guys. Don't be buying these 20-day moving averages and adding as swing trades. Okay, guys, this 20 is now minor because you've been just riding it now. The more major moving average would be this gap fill, 50-day moving average. Same thing. All these charts are lining up the same. So 50-day moving average, gap fill is your next support if you're in a swing trade. If you're on a swing trade basis. Okay, guys. Let's look at Apple. Let's look at Apple. Apple behaving pretty decently. Pretty, basically a beautiful chart right now. Acting support and resistance acting beautiful right now. The 200 moving average, as you guys know, is a brick wall on a first hit of a downtrend. So that's the first hit, pretty much in spirit of kiss of the 200, getting a nice pullback, and Now you gotta, you gotta wait for a time count. You don't just jump on board long. I mean, you are retesting this previous resistance, now support. See this trend line? You are testing it. On the weekly chart, we did break above that trend line. I don't really want to call it inverse head and shoulders. It is categorized as one because you did make a left shoulder, a lower low, and then a higher low here. So technically it is a inverse, and the measure move would take you to roughly, in the longer term, 530. Okay, it's going to take a while for this target to achieve that 530 if it does hit that, so it's not going to do it right away. I mean, you have the 20 sloping down. I'm sorry, the 50 week moving average sloping down, so it's going to take a lot of consolidation to get through that. And sure enough, that measured move does take you to a back test of this trend line breakdown. See, this major trend line has been riding since that big run in Apple, and that move up would be actually a back test of that trend line. So that's interesting. That's just an idea that could possibly play out, but there's no way of knowing that for sure. You just have to play it day by day and see if these ideas come to fruition. And it does actually match up with this previous pivot as well. So interesting how these line up multiple patterns, measured moves. It's very, very interesting. But we'll see how it plays out. Right now, I'm looking for Apple to pull back and play it perhaps on the long side. Right now, for me, you have to wait for this 20-day to catch up. You can't be, you did hit the 13 EMA. I know a lot of you guys like to trade the 13 EMA, the 10-day moving average. Those sliced right through it. I like to play more of the major moving averages, like the 20-day moving average, and you also have the 150-day kind of sloping, kind of trying to turn around. So that'd be more support here, and a Fibonacci as well at the 382 retrace. So right in this general vicinity, what I wouldn't necessarily be adding here. You could, I mean, that would be the actual place where people want to jump on long, because that would be a back test. So they do want to save it right here. But for me, I would have to look for more support rather than just because on a weekly time frame you still can close back above. So if you look on a weekly time frame, they can easily pierce this on a daily time frame and then close back above, and that would still make that pattern still valid. Okay, so right now we close right on there on a weekly chart. So this is a breakout, right? So any close back below would kind of negate the breakout, right? So you want to see it kind of pierce it on a weekly chart and then close back above it. So you could play that, and if it does close back above, you can kind of try to ride it up to the next resistance. But that 200-day is going to be very, very powerful. It's going to take some major consolidation here before we can get to this 200. Okay, I mean, it's sloping down very, very, very. Look at that rate of decline on that 200. So it's going to take some time to really consolidate and get through that 200. Okay, let's look at JPM. Let's show you those MACD divergences that I've been seeing. Before I forget, so pretty much the same as SPY. You want to look at these major stocks, leading stocks, how they're making newer highs, but the MACD is not making, not confirming that. So that'd be a negative divergence, and it is crossing over at the moment. JP Morgan, okay. And if you look at Google as well, Google is the same thing. You're making new highs on Google, but the MACD is making lower highs. Okay, guys, just something to look out for. That's not really much on the timing aspect of trading. It's more of just a signal that it could be a sign that the big boys, institutions, are selling and getting out before the drop. Okay, let's look. I think that's pretty decent. Anything else I want to take a look at really quick? I just want to go over some of those stocks for now. Amazon, not doing much here. I got to do some more analysis here, but it looks like we are, still, we still inside this green bar, so technically that's still an inside bar pattern. You would think it's gonna try to hold this low here, okay, guys, and we never close back below this green red bar. Okay, I believe this was earnings, and you see all that short squeezing. But now you want to see, if you want to go short, you think the stock is overbought, you want to see a bearish pattern below perhaps the 50, perhaps the 20-day moving average. But right now, there's no real reason to jump on short. Actually, the pattern looks more bullish than anything because you have the rising 50-day moving average with the inside bar pattern. Okay, guys. So that's what I'm seeing on Amazon. Let's take a look at. Is there anything else I want to take a look at? I just hope you guys had a really great week. I'm still being patient in this market. I'm in cash, and I'm just waiting for the next setup. I mean, if you guys are itching to go short, it's very difficult. You need some kind of sign. Right now, we're not getting it. The volume is very light. It's very difficult to short a dull market. So very difficult. If you want to wait for a high volume reversal day and then wait for a pattern, that's always a nice scenario, but right now we're not getting. We can't even trade above 100 million shares on the SPY, so it's very difficult at the moment. So I hope you guys just play it day by day, and hope you guys be patient and play it as it comes, and that's what I'm doing. And just watch those levels, guys. And I will talk to you guys later. It's been 15 minutes, so I will update you guys next week. I hope you guys have a great weekend. I certainly did. and I will talk to you guys later.